Google, Meta, and Microsoft all reported earnings today. And if you are an AI, a semiconductor, or just an AI infrastructure investor, these earnings matter. And that's what we're going to take a closer look at in today's episode. Everything you need to know as an AI investor. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, I just want to take a closer look at price action. Google is the only one, unfortunately, that is green. We can see this is after hours sitting at $293. This is wild, right? Just a few months ago, we were doing videos on Google sitting at 150, 140, 160s, and why this is one of my favorite stocks to be adding. And they continue to show the strong demand for the AI space. Now, unfortunately, Meta is down roughly 7.3%. There were some weird things happening with two tax laws that are creating, in my opinion, a lot of, I don't know if noise is the right word to say, but a lot of, yeah, maybe noise in their numbers this quarter. It's creating a lot of fears because investors and analysts don't really know how to put this into their numbers and what are some of the implications that it might have in the future. Then we have Microsoft. Microsoft is down roughly 4%, sitting at $520. But what, regardless of the stock price that all these are seeing, all three companies, in my opinion, did paint a great picture for the AI market. So, I mean, we heard from NVDA yesterday why the AI market can continue to grow. And the commentary that we heard from these three players, in my opinion, solidify and give evidence that that market is still very, very healthy. We're going to see compute constraints from all three players. We're going to see improvements or increasements in capex as well. And we're going to see kind of just an overall AI market overview. So, from what I heard from these earnings, if I own actually all three of these shares, I have no intentions of selling any of them. And in the AI investments, some of my maybe higher growth plays like your Nebius, like your CoreWeave, or any other one within that industry, I also have no intentions of selling because I believe there is still a multi-year timeframe growth for this market. Obviously, things can shift on a monthly basis. The market extremely volatile, but the long-term tailwind from this is still pretty bullish. Now, in forms of price reaction, AMD is down roughly 0.5% after earnings. After these earnings, I don't understand why this one would be down. NVIDIA is up roughly 0.3% right now. There was a nice increasement in capex, and Broadcom is also up about 0.3% after hours. So two out of the three major AI companies are pretty much green right now, and they actually had a really good day overall, right? All these stocks were up over 2% on the day. Now, I really want to take a closer look at their overall presentation. But first, if you guys haven't noticed, I did start a semiconductor and AI community. Right now, in just a matter of one day, we got up to 33 members. Right now, as this community is being built up, I am giving 50% off all annual plans. And this is going to stop once we hit a certain amount of members. This is just to kind of get this community rolling and kind of get a nice entry level price for you. So check out whatthechiphappened.com to kind of join this community where we do deep dives. And we're going to see some examples in today's episode. But kind of let's go back to the tech earnings and the AI capex. So the big picture. Microsoft, Meta, and Google just announced massive increases to their capital expenditure. This signals a momentum built out of AI infrastructure to meet soaring demand. And we're going to see what all these companies are saying. So Microsoft, their calendar year is a little bit different than most others' fiscal year, or their fiscal year is different from the calendar year. So they just reported quarter one capex, which was 34.9 billion, driven by growing demand for cloud and AI inferencing. They mentioned the following: with accelerating demand, we're increasing our spend on GPUs and CPUs. We now expect fiscal year 2026 growth rate to be higher than fiscal year of 2025 when talking about capex for the AI infrastructure. That is insane, in my opinion. They also do mention the following, and if you are an investor of Nebius, of maybe Iron, of CoreWeave, this should get you really excited. Key constraints. The bottleneck isn't chips, it's the space and power to put them in. Demand is increasing everywhere faster than they can build data centers. So if they need more data centers, they're most likely going to do a lot of these leases with other companies. We saw again that massive deal Microsoft has with Nebius, and I believe that's going to continue because they need more space, because they need more power. So overall, that got me super excited. Now, Meta's a little different, right? Meta doesn't do AI investments for other people or for cloud service providers. They just do it for themselves. So they did increase their capex on the lower end. So the top end is still $72 billion, but for this fiscal year of 2025, it's going to be on the lower range of 70 billion. They also mentioned that 2026 outlook, capex dollar growth will be notably larger in 2025, in 2026 than 2025. This is another company saying they're going to spend more and more money on AI. We just got two, right? And it's insane to continue to hear this. And the main reason is they think it's the right strategy to aggressively front load building capacity. If super intelligence arrives sooner, we will be ideally positioned for a general shift. And he also mentions if super intelligence doesn't arrive, all this AI infrastructure they can use for their core products, which will help become more profitable and more revenue driven for Meta platforms, right? So if you invest, there's various use cases that they can use that AI infrastructure. Now, I do want to say if you want to stay ahead in the AI chip market, in the semiconductor industry, subscribe to the channel. I'm trying to hit 85,000 subs by the end of the year. And if you've seen a lot of great content here for free, but if you want more content, check out my free newsletter, whatthechiphappened.com, or you can also join a community with like-minded AI chip investors. Also check out whatthechiphappened.com. Now let's look at Alphabet. Alphabet increased their capex. Their previous capex was $85 billion. They raised it to 91 to 93 billion. And for 2026, they expect a significant increase in capex again. The main reason is they are seeing substantial demand for AI infrastructure products, including TPU-based and GPU-based solutions. It is one of the key drivers of growth. Now, the overall why, everybody is saying just the demand is crazy for AI. This is, and again, for at least for Microsoft and Google, this capex is not speculative, right? It's not fake stuff. It's actual revenue growth. It's actual revenue potential. It's actual earnings potential. And I'll show a chart in a bit. Now, Microsoft's cloud was up 26% year over year. They mentioned that their commercial RPO increased 50% to nearly $400 billion. They expand their plan to double their total data center footprint over the next 2 years. And they are now likely to be short capacity to serve the most important things they need to do: AI growth. Meta, they keep seeing this pattern where they keep having more demand to be able to use more compute in ways that they think would be quite profitable. So they wish they had more capacity today to be able to be more profitable and more revenue growth. Alphabet, strong cloud momentum. Google Cloud said they signed more billion-dollar deals in the first 9 months of 2025 than in the past 2 years combined. And they expect to remain tight in demand supply environment in Q4 and 2026. And the overall key driver with their demand is both the TPU and the GPU solutions. So overall, in my opinion, this is extremely bullish for the AI market. And to me, as an AI investor, this is what I like to see. This doesn't guarantee stock prices go up on a straight line every single day, but if we ever see some crazy pullback, some buying opportunities, I have to remember what I just said today. The market is expecting to be supply constrained for the next few quarters, and there's expected to be power and data center constraint for a very long time. Now, I had this pretty cool chart here from Google. I will most likely be doing an individual episode on Google, Microsoft, and Meta later this week. If you want me to do any in first, let me know in the comments below. But this is more just as an AI investor. And the first thing, another thing I want to showcase is Google's cloud revenue. We can see, right, from March 23rd to now, revenue has more than doubled, but their cloud operating income has 14x, probably more than 14x. That's closer to 20x, I would say. Maybe not 20x, somewhere around 17x. But regardless, massive, massive growth there in operating income. And all this is being driven by the nice amount of AI solutions and AI demand. So overall, I'm super excited for the overall AI market. Now, this is some just a quick preview of what we see here in the community. I share quick tidbits on recent news. We talk, for example, AWS Project Rainer, SK Hynix Q3 earnings, Microsoft's OpenAI partnership, Supermicro federal entity announcement, a quick update on some of the earnings, and then in forms of bigger analysis and a more deep analysis, we already have some things covering in and so much more happening in this platform. So make sure to check out whatthechiphappened.com. I'm super excited. I feel like I haven't slept at all for the past few weeks trying to build this, and I'm really excited how it's turning around. So appreciate it, and I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.